Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, Sara Mehle, Senior Index Research Strategist at Nasdaq Investment Intelligence, and Cary Carbonaro. She is Managing Wealth Advisor at Ashton Thomas Private Wealth. We're here to discuss asset class rankings, sector performance, and what is top of mind for clients heading into the U.S. national election. It is great to have everyone with us. Welcome to Trade Talks. And Chuck, equities remain the number one asset class despite the amount of worries that are out there. The market just continues to hit all-time highs.
Yeah, it really does. We've had this pullback in August, and the market just really took off from there. We obviously we broke out to new all-time highs, and really we're not too overbought here. I would say we're more overbought than we were last month, but it's still, I wouldn't say anything to worry about. Even if we get a correction, down to somewhere around 55.50 on the S&P, I think that'd be completely normal and would expect the uptrend to resume. And we've also seen really good breadth out of the market. In other words, it's been more of a broad rally than, just the Magnificent Seven like we had been seeing at the beginning of the year. A lot of stocks have been going up at the same time, which is typically a bullish thing. So we'll see how it plays out. But right now it seems to be good.
Yeah. And Sara, when you talk about the Mag 7, when we think about the Nasdaq 100 index, which is the home to these particular set of stocks, you're continuing to see buy signals even at the levels where we are.
Right. So the Nasdaq 100 remains approximately 1.5% off of its all-time high printed in June. So we have not hit or exceeded that June level or July level, excuse me. But this week, as you mentioned, the Nasdaq 100 did give a second consecutive buy signal at 20,400. Again, second consecutive. Now it's up against resistance here. And just has a little bit left to go to, again, 1.5% to take out those July high levels. Remains well above the positive trend line. And as Chuck mentioned, slightly overbought, but not too heavily overbought here, about 41%. But a nice solid technical picture here for the Nasdaq 100.
Yeah. And Cary, despite the levels where the market is, certainly the performance was attractive for any portfolio at this point. What are clients talking about? What are they worried about? Why is that?
So most of my clients are not sleeping, mainly because of the election. Although I'll say it's actually four things. It's the election, it's the Fed, it's inflation, and it's the economy. So it's kind of a combination of all those put together, right? And it's interesting because I've got clients, it doesn't matter if you're a Democrat or a Republican, you're still freaking out because we don't know which side's winning, and everyone is saying, if the other side wins, I'm, want to leave the country. And I'm actually having clients talk to cross-border specialists to try to talk them out of what that means and what that looks like. And it's interesting because I said, everybody said that last time, or the last 4 years and the 4 years before that, and nobody left. So it's just hysterical that people are literally not sleeping and just so worried. And also taxes is another really important thing that people are very worried about because their wealth is tied up in that. It's not what you keep, it's not what you make, it's what you keep. And so what these two different very different tax policies is really going to affect how people's wealth is spent, saved, invested.
Yeah, it's interesting. We're hearing the same thing on the show too. And anecdotally, I've heard of people looking for dual citizenship as well. So it seems as if there is a level of fear out there, but I think it's more around fiscal policy and tax policy relative to the Fed at this point, right? And it's not even the person that wins the election, it's the composition of the legislature and what that policy looks like. So it could potentially be in a holding pattern, not just until the day after the election. It depends, and it's sad to say, the transfer of power. And once these policies start to get implemented, it could be a few months from now. It won't necessarily, like a light bulb will switch on the day after the election.
Well, what's also interesting with that is, I tell my clients all the time, the market's going to be up this year because it's an election year. And it doesn't matter who gets elected, a Republican or a Democrat, the market doesn't care. What's more important is, are we in a soft landing? Are we going to have a recession? That is the driver that's going to affect the market way more than who gets elected. So, but nobody really wants to hear that because they still believe that if their candidate doesn't get in, the world is ending.
Right. Well, and again, we heard this 4 years ago too, and look what the market has done since then. Let's go back to factors for a moment here, Chuck and Sara. So Chuck, when you think about momentum, it's still, and this, from a technical perspective, reiterates Cary's point, tell us, momentum, again, it's outperforming.
Yeah, it is. It's had a really great year after really not so great a year last year. It's the top performing factor. It's up 33% year to date. It's had a great last month too. It was up about 6.5% over the last month versus roughly four and a quarter for the S&P. So it just continues to barrel ahead. Quality I would say is kind of like the number two factor. And we have, values kind of been in last place most of the year, with being up about 12%. So, yeah, it's a good thing to see. You want to see momentum, out of the market. That kind of is another, point in the column of it being a bull market versus, starting to roll over into a bear. So.
Yeah, I mean, Sarah, did we just like pass a birthday last week or the week before in regards to the bull market? So what you're seeing in the indexes as well, momentum is performing there too.
Yeah, so one of the best of the performing so far this month of the Nasdaq featured indexes is the Nasdaq 100 Dorsey Wright Momentum Index. And this particular index owns 10 of the strongest and the highest momentum names within the Nasdaq 100. It's evaluated monthly. But I was just looking at some of the names in there, and I really thought it was interesting. We're not seeing all the Mag 7 names are not in there. So just to point some out, we have Broadcom, Cintas, Constellation Energy Group, which just rotated in, Costco, iSurge, Meta, Netflix, NVIDIA, Tesla, and Vertex Pharmaceuticals. So a nice mix in there. But again, this particular index where we do have the Nasdaq 100 with a momentum tilt is one of the best of the Nasdaq featured index so far, up about 1.8% so far over the last few weeks.
Right. And when you talk about broadening out, what do the sector indexes, how are they performing?
So within the Nasdaq Dorsey Wright lineup, I know Chuck's probably going to touch on this in terms of like sector rankings, but it lines right up with the rankings that he's seeing. So the Dorsey Wright Industrials Tech Leaders about 6% so far this month. Dorsey Wright Financials Tech Leaders up about 5.7. Staples remains the laggard there, slightly flat. And then within thematic tech, we're seeing strength in the KBW Financial Technology Index as well as the Nasdaq CTA Cybersecurity Index. And the best performing out of all about 120 that we're tracking pretty closely is the Nasdaq Sprott Junior Uranium Miners Index, which is up 15%, so double digits there.
Yeah, no doubt the Constellation news really was a catalyst for that one as well. And Chuck, your follow-on thoughts as it relates to the sectors?
Yeah, we haven't seen a lot of change over the last month. Financials are still at number one, and industrials and technology are number two and number three. Financials have been interesting. The banks have been moving up, with the rate cuts. But also, I think maybe a narrative that hasn't been talked about as much is that, insurance stocks are up a ton. I think in most cases up on average about 30% this year. In some cases, that's because, as I think, unfortunately, all know that, car insurance has been going up like crazy, right, into adding to their profits. But yeah, it's just been interesting to see. But also Wall Street too. A lot of the investment service companies have been moving up quite a bit. So yeah, the financials is a play. Will it keep on from here? It certainly has a relative strength. So it's something we would stick with. But it's we are worried about is it the type of thing where if rate cuts don't follow the path that everybody thinks, will they hold up as well? But we'll just have to see about that.
So, Cary, when you think about strategy leading into the election, even beyond that, into 2024, going to 2025, when you're speaking with clients and the broadening of this market beyond the Mag 7, and of course, we know there's a lot of cash on the sidelines too, which is another catalyst for U.S. equity markets, shifting cash strategy. Tell us about that.
So it's really, the party is over. If you didn't know, people got to sit in cash and T-bills at 5+% risk-free rate of return for the first time in 45 years. So it's been incredible while it lasted. We had two good years of great, incredible yield with no risk, but it's now already going the other way. So obviously we're in a deceleration with rates. So T-bills are already in the 4s. The short end has already come down. The long end has not yet. So we're repositioning assets because so many of my clients had huge amounts of money in T-bills. And now we have to redeploy that cash. So we're now going into shifting to longer term, shifting to any type of credit quality that's positive, that's, we're not going into junk or anything, but anything that's still lower risk than the market, because that's their super safe bucket. So it's not necessarily for stocks, but some of that money is going to make its way into the stock market. So, it's a matter of, what their risk allocation is and how much we're going to put into the market versus the safer bond assets.
Yeah, let's talk about your practice more specifically. You focus on women investors for the most part, and you have a book coming out next year, Women in Wealth, a playbook to empower clients and unlock their fortune. Congratulations on publishing that.
Thank you.
You have a stat here. By 2030, women will control 2/3 of the nation's wealth. That's up from 1/3 today. That's just in 5 years.
Yes. Is that unbelievable?
Yes.
It's unbelievable. So so I'll just repeat that in case somebody didn't hear it. But yes, women are going to control 2/3 of the nation's wealth for the first time ever in history, which means in my profession, wealth management, the majority of the clients are going to be women. So this is an industry that was created by men for men. And I don't know if you know the other stat, but 70% of women leave their advisors when their spouse dies. So women are actually not being served to the best ability in our industry as it stands today. It's not very female friendly. So there's a lot of ways to change that. I've been talking about this for about a decade, and here we are 5 years away from this major wealth shift transfer. And it's not just women inheriting money or getting divorced. It's also women becoming the primary breadwinners in the United States for the first time ever in history, which is incredible. And women starting businesses as entrepreneurs more than men. So it's a combination of all these things happening at once, and it's going to be a shift and a wave that is going to happen. And so I believe the industry needs to change to serve this demographic. And actually, a lot of people are now starting to talk about it, and it's super exciting because women have not been getting what they need from wealth management.
Yeah, I mean, if you look at the composition of many senior leadership teams, you do see women, in later 40s, 50s that represent it, and they are building their own wealth. It's no longer just inheriting because you live longer than your husband.
Right.
So I would also say what's encouraging about this too is you look for the next generation of advisor. This can also make it quite attractive to bring
women,
future leaders in.
Yes. Yeah. Well, it's interesting because right now it's 80% men advisors and 20% women. And we've unfortunately been at that stat for about 25 years. It has not moved that much. So we definitely have to reach the next generation of women. One of the things that I did as I'm a CFP board ambassador, and we actually went out and we went to the Girl Scouts of America national conference to teach girls from 5 to 18 about the CFP profession and what it is. And nobody even knew what it was. Like people know what an attorney is. People know what a CPA is. Nobody knows what a CFP is. It's just not something that's taught, and especially not to women. So we're really trying to reach the next generation to show that it's a great profession, and it's a really great profession for women.
Yeah, I certainly think so. Especially a lot of women embody that entrepreneurial spirit, and the advisor role inherently encompasses that. So I think that's exciting for the next gen of advisor as well. Chuck, to wrap up here, other thoughts on asset classes in terms of how they're performing? We've covered equities. We know about momentum and some of the other factors. What are you seeing in the other asset classes?
Yeah, I mean, so I would say, probably the biggest changes we've seen over the last month are in international equities. There's still two where they were last month. But we have seen a little bit of shakeup in our kind of sub asset class rankings within international. So for the longest time, probably, almost 2 years, emerging Europe was kind of the number one place to be. And, we've seen developed Europe kind of come on here recently and take it at the number one spot, and emerging Europe fall to number two. We've obviously, all the headlines have been about China, over the last month, with just a massive move up, about 50% in like almost no time. So that's been on our mind. Obviously, the rankings of China have gone through the roof, on our system. Hasn't quite pushed emerging Asia up to the top spot. It's at number 3 and still has some room to go. But it's also the type of thing where, China rallied 50% off the bottom, but they've already fallen about 20% since then in the last week. So it's a very volatile space. It's not something I would, put a lot of money towards just yet.
Yeah. And Sarah, to wrap up here, let's talk about styling caps here. Finally, small caps, they got the pop here.
Yeah, we've seen some pop this month in small caps, not too far behind, or large caps aren't too far behind there. The Nasdaq US Small Cap Index is up about 2.1%, while the Nasdaq US Large Cap is up 1.9, and mid caps, again, not too far behind at 1.6. But one breakout I did want to mention this week was the Dorsey Wright Small Cap Momentum Index. That is well off of its all-time high, but not very close to breaking out of a range that it's been in for quite some time. And the next level of resistance is going to be at its all-time high from 2021. So we'll continue to monitor that.
All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.